So a mixed day on the North American markets. The TSX shooting up another 200 points to another record close. For more on what's going on, let's go to Neela White. She's Senior Portfolio Manager at Blue Wing Advisory Group with Raymond James. Thanks for coming in.
Thank you for having me.
More tariff threats from Donald Trump, this time to up the steel and aluminum tariffs, already at 25 to 50%. So a big knock on that industry. If they happen. Are you seeing as much reaction as we saw in April when the big tariff announcements were coming out?
Shockingly, no. Just as I was leaving the office, I was thinking, it's funny now that the market's not reacting the way that we think. I mean, I would have thought after the announcement Thursday, Friday, and then doubling the tariffs, that we would see a total market pullback again, just like we did in April. But no, it's almost as if there's either lack of sensitivity now just because we're so used to that feeling of unrest or confusion.
It's constant, right? The rhetoric is constant.
Absolutely.
Yeah,
absolutely.
So you think people are just kind of baking it in and trying to ride it out?
I do believe that, and I think that there's where caution needs to be had, right? I think it's always a error if we become complacent, because that's when we're going to be caught on, jumping full feet in and then seeing the pullback, then seeing the reaction, or then seeing this escalate, by the end of the week, this could be a moot point or it could escalate.
Yeah, that's a problem. Nobody knows.
Yeah.
China as well has been accused by Donald Trump of violating the agreement that they already have in place, which is a very thin agreement. They're supposed to be talking about unwinding everything else. Do you see that particular situation? I feel like Canada, with our access to the U.S., might get out of things or come to some agreement sooner. Do you feel like the China conflict might be a longer one that continues to affect the market?
You know what? I think that will have bigger hurt down the line, especially the longer this is dragged out, and especially when there's sort of a tit for tat, and it goes beyond just trade. I think I'd read an article, it was about restrictions on student visas. So when we start looking at that, it's not just the market, it's going to be everything else, right?
And we know that China is very sensitive to other moves by this administration that could affect their trade discussions. Given the volatility then, what are you looking at for investors? Because you're not getting the bargains that you got in April, right? Things haven't recovered necessarily the same way, technology stocks being one example. Healthcare is still way down. Where are you finding deals for people?
I would say trying to look for businesses that, one, are going to be needed demographically no matter what happens with tariffs, two, that tend to be isolated from the threat of tariffs. So maybe something more local to Canada, local to areas ex-USA.
Okay, so let's talk specific stocks. Are you looking at sector stocks, or are you trying to pick apart different things?
It tends to be more demographic or sector related. So for me, obviously, I have a real bent towards the aging demographic, and it's always looking for stocks that support the aging demographic, just because those numbers are going to increase regardless, as well as when we look at anything that's manufactured in the U.S., they have the same aging demographic that we do for things manufactured in Canada.
Okay, so you mentioned that, for example, the aging demographic, it should be insulated from some of what we're seeing in the geopolitical situation. But have you noticed that they are? I wonder, because healthcare should also be somewhat insulated. Same reason. We have an aging population, they're going to require more healthcare. But you've seen those stocks fall.
I think for those stocks that have fallen, especially if they trade on the U.S., it's the fear of what happens to Medicaid. How are these companies being supported? I think from a manufacturing point of view, if it's actual vitamins, supplements, actual prescription medications, where are they getting their ingredients from? And then you see the pullback. But I think, if you're looking at being able to source ingredients for medications for healthcare outside of the U.S., you're able to more insulate that cost and protect the value of the product.
Okay, tell me about Severia. That was one of your stock picks.
Yeah, they are a leading accessibility manufacturer, and it's everything from stair lifts, home elevators, wheelchair lifts, also on the patient care side, which is a growing part of the industry. It's things like beds that have pressure support, lifts that are anchored to the ceiling. So when you look at healthcare, we have a shortage of workers. It takes two people to do many heavy transfers. It takes somebody to roll someone every 2 hours. We don't have the staff. So I think right there you have legs. They've been strategic in their acquisitions. They have a really great breakdown on their model. It's an industry that needs to grow, and their products are USMCA protected.
And they have not bounced back from the April low. Is now a good time to buy?
I would say so. I think when it actually had the pullback, I think it was very misunderstood on how tariffs would impact them. And I think here we are now in May, that when I look at the stock price and the need...
We're in June now.
Oh,
you missed the by
That's
day.
right.
Yeah.
I missed the first day. I was so cold over the weekend. I thought it was November.
It felt like, exactly.
So when I look at stuff like that, I think, okay, here's a product that's going to have increasing demand, especially when you look at the tailwind of the aging demographic and people wanting to age in place. We look at homes, older homes. Everything's upstairs, bathrooms and bedrooms, kitchen's main floor, laundry's in the basement. Well, when you start having issues and you don't want to move, how are you safely navigating stairs, right? So I think we look at how can we age in place as cost efficiently as possible.
Okay. Jameson Wellness is another one that you like, which they make vitamins and supplements?
Yeah, vitamins, minerals, and supplements. It's a growing market. In 2025 first quarter, 52% of the revenue came from China. I think we're now in a era post-COVID where people are very much health aware, health empowered. And even when we look at the Gen Z, they're on the increase with taking supplements, 56% if I'm not mistaken.
Gen Z, they're like 25 years old. What are they taking supplements for?
It's 56% up, and the favored mode, according to a study that I read, is gummies. So even when we look at Jameson as a gummy producer for innovation, I think there's a growing market, as well as now they're venturing for supplements into the GLP area for supportive products, protein powder, amino acids, probiotics, and multivitamins. So they are really sensitive and great at responding to consumer trends.
And there are changing trends, definitely. Very quickly, I want you to get to K-Bro linen, because I think that's been mentioned by a couple of people. And why do you like that stock? And explain them for a second what they do.
Oh, they're within Canada. They are the largest, basically, healthcare and hospitality linen processor. In the UK, they have a very large footprint now, especially after they acquired Starman just last week, if I'm not mistaken. It's given them global footprint. When we look at the breakdown, it's about 58% of the revenue comes from healthcare. So we know that's a growing trend.
Yep.
And about 42% is from hospitality. On the healthcare side, they do have that revenue stability. It's 5 to 10 year contracts. Hospitality tends to be 2 to 5, and it's brand loyalty. So when you look at the names who they have contracts with, it's on the healthcare side, Sick Kids, Trillium Health. On the hotel side, it's Four Seasons.
Big brands, big players.
So when I look at that, and I look at the fact that they are localized sort of in Canada and in the UK, they are so insulated from tariffs that I think here's a place we can go. It pays a dividend. It certainly is one of those, I think, if you're patient and you're not looking for sort of the dash, I think it's a great place to say, okay, here's something we can invest in with a growing trend.
Got it. Neela, thanks for coming in. Appreciate your time. Neela White is Senior Portfolio Manager, Blue Wing Advisory Group with Raymond James.